Hi, this is Zach Meir with the Bulletin Board Heroes here at Zach's Traders Cafe for Thursday, the 6th of March. Starting off with the FTSE 100, which is right on the uptrend line there from back in January, 86.80, the nominal level there. So if you're a fan of this market, this is almost exactly the point where support should come in, or not. Below that, then we've got neckline support there towards 8600, and that was the old initial January January resistance for this market. Worst case at the moment, probably down to the 50-day line, 85.40. End of day close for the RSI below neutral 50. It's just below that now. Would possibly or probably indicate that we've got to head down to the 50-day line for the first time since early January. Moving on to the DAX, and here the situation is that we've once again hit the top of that channel. It seems to be a channel that the market can see, so 23,300. I think the peak today a little bit below that, but actually right through that. And end of day close above that, and we'll be looking for a fresh acceleration to the upside. Otherwise, hopefully support will come in here towards 22,800, which was the initial February resistance. Worst case on a rug pull, and obviously we have to be wary of that, is down to 22,000, which is the floor of that rising trend channel from back in November. You can see that we had a decent RSI 50 rebound to take us back to the top of that channel earlier in the week. Moving on to the Dow, where one almost shuts up one's eyes given the tariff situation going on at the moment, but we're trying to hold on to the floor of that channel, the one in place since March last year. Worst case, I suppose, at the moment is we have to head back down to the 200-day line for the first time since the end of 2023, which is amazing, even if it does actually give way. On the upside, the 50-day line there, 43,600, the likely resistance for this market. Moving on to Bitcoin, and here, obviously a bit of a flurry with the strategic reserve news, but here we're back in the range now, which is what we wanted, 90,000 to 109. And all that's missing at the moment actually is an end of day close for the RSI back above neutral 50 to get us back to at least the 50-day moving average at 97,000. We had our double dip of the 200-day line, and presume that anyone who bought the second dip there around 82,000 would be feeling very pleased and quite smug with themselves. Moving on to gold, and here you can see that it's a bit of a battle here with the old neckline, the neckline support rather at 28.85. Staying above that, while we're above that, looking for 3,000 plus, perhaps as soon as the end of this month. Obviously, a bit of a World War III play, that one at the moment. Moving on to the stocks, and starting off with Audioboom, which has frustrated over the recent years, but here we've had a decent bounce above old resistance, the old resistance there around 445, and the new support there just under £5, so that's nice. The floor of the channel there around the £5 level, and above that we're looking for £8, perhaps by the end of next month, if the pesky sellers can get out. The other point to note is we have a double bounce for the RSI just above neutral 50, so that is a leading indicator on the upside. If you were fussy, you'd probably say there's a line of resistance there which needs to be cleared, hopefully on an end of day close basis today. On to a requested stock from somebody who's very old and wise in the market, and here we've got Catenai, and here you can see that the shares bumping along the bottom of a potential rising trend channel base. I suppose that the price action recently does fit that. Initial resistance here towards the 200-day line, around 0.2 pence. Best case scenario, if we can get through recent resistance and the moving averages up to 0.32, effectively retesting the January resistance area. But hopefully, after that bull trap double top through 0.32, the last of the weak hands are out, and the shares can make their way higher. Onto a stock which is not in alphabetical order, but got Babcock next, and this is just interesting because a while back I drew the guess of where the upper parallel of that rising trend channel was, and obviously the shares 3 months later we hit that on the nose at £7, the £7.50 area. Let's see if we can get an end of day close through 7.50 to give us a fresh leg to the upside. On to Chemring, another, I suppose, aerospace defense play. Here you can see that we had our initial target there around £3.70. The shares blew the lights out on that one, and and the doors, in fact. And the shares now heading for that May resistance line projection, £3.65, hopefully as soon as the end of this month, while we're above £4.16, the initial February resistance. First Class Metals is next, and recent events led to the shares falling away after the push through the 200-day moving average, but it looks as though there is some solid support here around the 1.5 pence level. We've had a little bear trap rebound from below 1.5 pence. So on that basis, at least suggesting that we're in a range between 1.5 and 2.5, and maybe we have to wait a bit longer for that 3.2 pence target we had previously, but gap to fill there up to 2.25. Maybe while we're above 1.5 pence, we can head to the top of the range over the next few weeks. News once again from Helium 1 in America, and here it's interesting that we had the spike higher to the top of the channel there, the rising trend channel base from October, and we've been too strong to fill the gap down to 0.92. That is a bullish signal. Might suggest that we can head back to 1.25 pence over the course of the rest of March. RSI's bounced above neutral 50 as well, so that's a little bit of a help as well. I suppose to be cautious, wait for an end of day close above the 200-day line at 1.05. Northern Bear had a decent update today. I think they were exceeding expectations, and here, although it's a bit of a slow one, rising trend channel here from the beginning of 2023, top of the channel there, 75 pence, which I suppose we might get in 2 or 3 months at the current rate of progress, while we're above the 50 pence zone. Another one of those, one of the few solid rises in the current environment is QinetiQ. And here, happy to say that we've hit our second target there, around £4.95, and looking for a new level higher, which is probably going to be the line I'm about to draw at the moment, the upper parallel of the August line, and that's heading towards £5.40. Maybe by the end of this month, while we remain above recent resistance, the old summer 2024 resistance, around £4.90. Finishing off with a stock which has been rather difficult, to say the least, a bit of a roller coaster ride. And what's interesting here is that we had the pullback from 12 or 13p, or 12 pence at least, and the shares could have bounced at the 50-day line. They pretended to and then didn't. They could have bounced at the 200-day line and pretended to but didn't. But what one would assume is that having gone down from 12 pence to basically a penny, all the weak hands, everyone would have given up by now. And that idea is suggested or hinted at by the way the shares have gapped up today. Obviously, may still be sellers. Probably the best thing here, though, is to wait for an end-of-day close through 1.8 pence, or just buy the gap floor there at 1.2 pence, which we're not far away from. Obviously, we don't want to see another sub 1p dive. That's it for me today. More updates tomorrow.